All right, everybody. So today the Fed concluded its two-day meeting. Couple of things here. First of all, in their statement, very interesting, they did mention the strength in the economy and the labor market, and they expected that to continue. So there was definitely a mention of the strength in the economy and the labor market. They also said that factors other than food and energy were contributing to low inflation. Now, this was the first time, if you go back and remember, Powell, going back to the last two Fed meetings, was talking about how low energy prices were contributing to low inflation. They took that out. They said everything other than food and energy, and I think really what they were focusing on there was the fact that maybe energy in their minds, oil prices in their minds, may start to become a problem from an inflation perspective. So they said everything other than food and energy, that's keeping inflation low. So they singled out the food and energy, and I really think it was the energy in that statement that they were looking at and focused on. So that's important. They continue to say they would be patient when it comes to any further action on rates. Now, the market had a very interesting reaction to this. The first reaction was a very swift downdraft in the dollar and a rally in gold, and that all reversed. One thing that the Fed did do, and I'm a little bit curious about this, to be honest. I'm not exactly sure of their rationale behind it. I have my own thoughts about why they did it. They lowered the interest paid on excess reserves. It was at 2.4%. They lowered that to 2.35%. Now that's 15 basis points below the target Fed funds rate. Why did they do that? My speculation is that the Fed wants to maintain its own positive yield, its earnings. In other words, the Fed now pays interest on reserves. And bond yields were up around 2.5% right at that Fed funds rate. So if the Fed has to pay 2.5% and it's basically earning 2.5% on its portfolio, you got it? They're not making any money. And the way they pay interest on reserves is out of the profits they earn from their holdings. So by lowering what they are paying on interest on excess reserves to 2.35, it puts a little cushion in there for them. That's my conjecture, that's my speculation. I don't know really any other reason why they would do that. Is that a rate cut, and what does that portend for the bond market, dollar, gold, etc., the general outlook? I don't think it's going to make all that much of a difference, but it is still kind of curious. I mean, I find it to be a little bit curious. It is a kind of a mini rate cut if you think about it. They did not change their Fed funds target rate at all. That's still 2.25 to 2.5. Let's call it 2.5. So interesting why they did that. Not really quite sure. Stock market reversed. We were up strong. Earnings continue to be good. The other news that we saw today was the ADP payrolls came in way above expectations at 275K. I think they were looking for 180,000 on that. It came at 275,000, so way above. And who told you about that? Again, me. I've been tracking employment and withholding tax deposits. I mean, I constantly track that, but I've been telling you about that since, going back to February, when I said that thing basically hit bottom and started to really rally. In other words, the amount of employment and withholding tax deposits coming into the Treasury were accelerating. And by the way, that's why my jobs number in the last report, right, the March jobs number, I hit the nail right on the head. I think I was off by 2,000. I don't remember what the exact figure was like. I think I said it was going to be 200,000, and it was 198 or something like that. And everyone else had it way wrong. the forecasts were for a really, really low number. So I had that exactly right on. And by the way, the next jobs report is going to be released on Friday, and I will be coming out with my forecast tomorrow, as I always do, one day before the number. If you want to get that, but remember, that's a big tradable number. I mean, markets react to that. And if you have a good forecast, as I usually do, which was almost exactly on the money last time, you can make money on that. If you want to get that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader, or you could sign up for a 30-day free trial of Zombie Trading. I'll also send you that forecast. Zombie Trading, of course, is my daily Forex signal service. We front run the zombies, we take their money, and we get out before they die. By the way, Zombie had a quick trade selling dollar today on that Fed meeting, so we made money on that. Now, that about sums it up, really. Oh, oil. I wanted to talk about oil. I sent out the EIA report today, the analysis of that report. It was another bearish week. 9.9 million build in crude oil inventories. Gasoline demand came down. Refiner inputs came down. Distillate demand was way up. That was one bright spot. Exports were weaker. Imports were up. That's another negative factor. But we are now entering the seasonality, the seasonal point, inflection point, I would say, starting from April 26th on till about mid-September, where we typically see a period of drawdown in oil. And don't forget, May 2nd, that's tomorrow, the end of the Iran waivers. Nobody gets a waiver anymore, and we have to see the effect of that. So a lot of things coming together now. Interesting Fed meeting today, interesting outcome. I sent out my email on that to subscribers. If you want to get a copy, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader or Zombie Trading. Remember, none of the MMT people, first of all, the Wall Street analytical community, forget it. I mean, they can't hold a candle to what I do. They don't operate through the lens of MMT. They don't look at the right data. Everything they're looking at is rearward data. I look at the stuff which literally creates and drives the economy. And in addition to that, none of the MMT people, other than myself, and the rest of them are all academics basically, they do not synthesize the MMT concepts into a trading and investing approach as I do. It's unique, the service that I provide at $250 a month. It is very, very cheap. It should be $2,500 a month. Eventually it might get there. Eventually it might get there. So sign up now because it's cheap. See everybody tomorrow. Bye-bye.